Good morning. Happy Monday. It's 9 a.m. here in Hong Kong, in Beijing, and in Shanghai. Welcome to Bloomberg Markets, China Open. I'm David Ingles with Yvonne.
Our top stories this morning. Investors are turning cautious on the rates outlook after a pickup in U.S. jobs growth and wage gains. Focus now shifting to inflation reports coming out from the U.S., Japan, and China this week. The grounding of 737 MAX 9s goes global as the Alaska Airlines mid-flight blowout puts Boeing's comeback plan in jeopardy. And markets are betting big that China will cut rates further, even as the PBOC ramps up its stealth easing of monetary policy. You're certainly seeing that in the bond market, given where yields are here right now. And the stock picture hasn't really changed much here, but both really showing pretty clear pictures here of the macro weakness in the economy as well.
Yeah, the economy's not doing well, and the bond market, to your point, is trying to get ahead of perhaps what the PBOC is about to do. We'll talk more about that. In fact, in a couple of seconds, we'll show you really what the 10-year looks like in China. In the meantime, though, just very quickly in terms of the equity market, Yvonne is pointing out as well, we're coming off another week of weakness, if you will, across mainland equity markets. That said, just keep in mind Japan is shut today, so we're looking at the ex-Japan gauge, which is slightly trading to the upside right now. So equities on balance, most are up. Volumes are on the lighter side of things, so let's really wait for this week to really get warmed up. There's a statistic for you. Bottom of your screens on the CSI 300. A couple of markets are coming online. You have Taiwan, and it's a big week, of course, ahead of elections on the coming weekend here. Kospi Index, the big one there, of course, is prelim earnings out of Samsung leading that parade this week out of the Asia Pacific. Bond markets, as promised, you have the 2s and the 10s on futures because we're shut in Japan. We're up 11 weeks in the last 13. We're up virtually every single day on our Bloomberg gauge of China treasuries. And that's really why yields are trading at almost 2% on the 1, almost 2.5% on the 10-year yield. That's almost to the downside, of course, there. FX markets, you had a big pop in the dollar last week, biggest, I believe, since September or July, depending on which metric you're looking at there as well. We have some headlines coming through out of Boeing. We'll get to that in a moment, just very, very quickly. Currency markets this and commodity markets on the back of Saudi cutting oil prices to Asia Pacific. Here's a setup as we approach the first sessions of the week.
Yep, as you mentioned here, what we're hearing from the CEO, Dave Calhoun, in a message to co-vice presidents that they will be canceling that leadership summit after what's been happening with this Alaska Air accident. We've been following this throughout the weekend here after we have seen multiple airlines ground the Boeing 737 MAX 9 jets too. So certainly this is a continuing story here. Let's bring in our Asia Transport reporter, Danny Lee, who has not been stopped working basically all week, and I feel tracking this story. Tell us a bit more about the news. So they're canceling this leadership summit.
Yeah, that's right. So Boeing, Dave Calhoun, the CEO and president, in a message to staff, co-vice presidents, saying that they're cancelling their leadership summit so they can focus on Alaska Airlines, the investigation by the National Transportation Safety Board, and affected customers from this grounding. And separately, they will also be holding a all-employee safety summit as well. So these are the latest lines here from Boeing.
Next step for investigators here.
Yeah, this is a critical thing. So they've only just started investigating in the last several hours in the west coast of the US. And what the investigators want to do is to examine a whole range of factors, some of them that we can whittle off now. For example, the Federal Aviation Administration's oversight of Boeing. They'll be also looking at, the NTSB will also be looking at the methods and the way Boeing make their 737 MAX aircraft. They'll also be looking at things like the pressurization systems on these aircraft, particularly because it resulted in this depressurization of this MAX, which led to this blowout accident, and also stuff like the components around the doors and where it was trying to hold the plane together ultimately. So these are some things that investigators will be looking at over, I'm sure, the several weeks to come and months.
China's aviation regulators, they had an emergency meeting to talk about maybe a potential response here. What more can you tell us about that?
Right. Under a Bloomberg scoop that we put out on Saturday evening, we heard that the CAAC, China's civil aviation regulator, held a meeting to mold their own response to this 737 MAX 9 incident or accident. But we haven't actually heard anything more since, which may be good news to Boeing. For example, China doesn't have any MAX 9 operating in its airspace or amongst Chinese carriers, and they still have a limited number of new 737 MAXs overall, since they've only just started resuming commercially flying over the last year or so, and only now they still don't have deliveries in place, new deliveries of these MAX jets. So for China, clearly this is one to watch in case they do move against, but we don't actually expect to in this meantime. We've not heard anything.
Remind us, Danny, how, and I would imagine it's a case-to-case basis, but early days, but these things will take time to figure out really what went wrong, right?
Right. Okay. This will take a long time to figure out what went on. Ultimately, though, the impact in the meantime is the reputational hit to Boeing, because after the global grounding in 2019 from 2 fatal crashes, we have already seen a spate of manufacturing and quality control instances that Boeing has faced with the MAX jets, and thanks to its supplier as well, Spirit Aerosystems. So clearly this is another bad knock for Boeing, particularly with its most recent and profitable MAX jet aircraft.
Danny, thank you. As you mentioned there earlier, the line that came out here when it comes to Boeing holding that company-wide webcast with a focus on safety that's going to be held on January 9th. Danny Lee there, our Asia transport reporter. And Bloomberg's been told that Chinese President Xi Jinping's sweeping military purge has come as a response to widespread corruption, and that's really undermining his efforts to modernize the armed forces.
Yep. Let's bring in James Mager. He's our senior reporter for the economy and government in China. James, just talk us through this. What is the cause of all these dismissals we're seeing within the Chinese military?
The government in Beijing hasn't given any sign of why the defense minister was summarily removed from his position, why a number of other generals, mostly in the rocket force, have been removed from their positions, apparently. What we reported over the weekend was that the U.S. intelligence community's assessment was that this was linked to a corruption investigation within the military, and especially looking at the rocket force. The U.S. obviously, the defense minister suddenly disappearing just after the foreign minister had disappeared, obviously focused a lot of minds on and attention on what was going on in China's military. And the U.S. intelligence community's assessment is that this is a widening corruption scandal that has led to the purge of these generals that we know of, but possibly this is going to continue on. The military said in their New Year's Day message that the anti-corruption campaign is going to continue. So, at least according to the U.S. government, it's likely that the reason for this is that that missiles were being fueled apparently filled with water instead of with fuel. There was a problem with the missile silo field that's being built in Western China, and other corruption instances that has led to this.
And James, we were learning that China has sanctioned 5 U.S. defense firms on basically their arms sales to Taiwan. Tell us what caused this new round and how significant is it?
This is another in a long series of sanctions in the last couple of years of U.S. defense companies that sell weapons or that provide weapons to Taiwan. The most recent one seemed to be due to a contract that the U.S. announced late last year to improve Taiwan's military communications network. And these 5 companies, the biggest one being BAE Systems, were sanctioned over the weekend. Logically, obviously, U.S. defense contractors don't have a lot of business in China, and so mostly these sanctions that they've announced so far have been basically symbolic. The president of Boeing Defense Systems, for example, can't come to China anymore. But Boeing Defense Systems doesn't have any business here, obviously. And China's been very strategic about how they're doing this. They didn't sanction the company Boeing. They haven't sanctioned the broader BAE. They're sanctioning very specific portions of these companies. And it really is just as an expression of their unhappiness with the continued U.S. arms sales. So far, it hasn't led to businesses actually being impacted and having to pay fines on this kind of thing. But that may change in the future. If these arms sales continue, eventually the Chinese may actually start sanctioning the broader parent companies of this, and that might lead to financial damages to them.
James, just one more question before we let you go. On Friday, the big news, at least as it pertained to China and Europe, was these investigations opened up into some of the imports, particularly around liquor and brandy. Is this a big deal? How big is the market there? And could we see something similar to what we saw with Australia?
I think this is a warning sign from the Chinese government. I mean, obviously, they're very unhappy. They were clearly very unhappy about the EV investigation that the EU announced last year. And so targeting imports of a luxury good like brandy for possible sanctions in the future is a way of warning the Europeans that if the Europeans put tariffs on Chinese exports of electric vehicles, China has many ways to respond. And this is very similar to what you saw in 2013 when there was a dispute between the EU and China over solar panels. Once the EU put tariffs in place on Chinese solar panels, China responded with tariffs on European wine. And so, the brandy exports from Europe aren't that big. It's less than $2 billion a year. But this is a way of focusing minds in Europe on what the possible ramifications could be, like we saw with Australia, where a $1 billion wine export industry was decimated by Chinese tariffs on Australian wine. And there are many other goods that could also have tariffs placed on them by the Chinese government if they want to do that, yeah. And if the Europeans bring in tariffs themselves.
James, thanks for the update there. James Mager there, our China senior reporter and for economy and government, joining us out of Beijing. A look at what's ahead as well this week. We have some data out of China, including some of these inflation numbers, PPI numbers on Friday. But I think the key one for investors is going to be that U.S. inflation print, especially after we got that strong jobs report on Friday, which did show job growth reaccelerating. Are we going to see those disinflation, continue this trend? That's going to be a key thing to watch there. Aussie CPI, that's one to watch. You got trade numbers out of China as well. India CPI to wrap up the week, too.
Yep. And also a rate decision, this part of the world, with the Bank of Korea towards the back end of the week. Right. Just ahead, we'll be heading live back to Shanghai there, where the UBS Greater China Conference is taking place, and we'll be speaking with Tommy Fang, the head of China Global Markets. Well, he's going to give us his take on perhaps what looks interesting and what's best to be avoided at this point in time within that market. Counting down to the open of trade, first sessions of the week in Shanghai, in Shenzhen, and here in Hong Kong. Futures are pointing slightly higher. Opening bell 18 minutes away. This is Bloomberg Markets China Open. Right, good Monday morning. As we await the reference rate of the day out of the PBOC, just two things to note. They issued a statement on Friday, came out Friday afternoon, evening here. On one, this is on aggregate financing, that the guidance is financing will rise rapidly through 2024.
Okay, so maybe some signs of credit growth, that credit impulse will come back this year. Certainly, we're waiting, of course, the credit numbers that could come out this week as well.
Could come out as soon as, I believe, today or tomorrow.
Yeah, certainly is one to watch here. Of course, in the midst of all this, what we saw last week with that massive drainage and liquidity as well to kick off 2024. Certainly, there's so much talk about the China turnaround story, which still we haven't seen any signs of that right now, whether it's in stocks. I mean, best way maybe to play the bond market, as we talked about, that rally that continues in some ways. And so, when do we start seeing those indicators that maybe, buy signals are coming out?
Well, the interesting you brought up the credit numbers this week was January. Well, we're getting the December numbers coming out this week, which takes us into January, which typically is a very strong month for credit growth in China. So that's going to be interesting to see. That's number one. Number two is perhaps also the PBOC talking about how they're pledging more support and financing for rental home construction. So that's going to be key there. Fix of the day is out, 7/10/06. We're also looking, as Yvonne is pointing out, the open market operations after they took the ATM to the system and withdraw the biggest amount on record on a weekly basis. So we'll see what this week holds for that.
Yep. All right. So some more signs of policy support there. Let's kick in and really talk about what's going on in Shanghai right now. The annual UBS Greater China Conference begins today, and gathering top leadership in business as well as in finance. It's the bank's first face-to-face gathering since the pandemic, coming a year after the mainland's post-COVID reopening. Let's cross live to Shanghai, head to Thomas Fang, head of China Global Markets at UBS. Tommy, it's great to have you. I'm sure you guys are all excited that this conference is finally happening for the first time in a few years in China. What's sentiment like on the ground right now?
Well, we just kicked off, and but to be exact, this is the conference we all physically together post-COVID. So we continue to run that, do the virtual and hybrid during the years of COVID. But it is exciting. So we have bringing more than 3,000 participants to our Greater China Conference, more than 2,200 clients, a record, even more than 2020. In many ways, when we talk about China, so this is the interest of China here at our conference.
Absolutely. And Tommy David here. So global investors are looking for any sign that the market is about to turn. And I would argue one of the strongest signals would be local investors deploying their money there. What is your sense of sentiment among the local fund community?
Well, it is a great point. I think among the clients I mentioned, half of them are actually relatively Greater China based. So there are a lot of the local investment communities. We're bringing them together to meet the global star leaders, the likes of Larry, Megan's, and all of that. So we really interact. So it's all about expectation management. Earlier in the program, you mentioned about, unlike last year, the expectation for China this year is relatively on the low side. So that's a good thing. So we hope the market will gather confidence, beat the expectation, and then really perform.
Rate cut bets are piling up in China as well, Tommy. I wonder, do you think policymakers are going to focus more on monetary easing in 2024 versus FX stability and the like?
So our view, overall, the policy stimulus this year will still be moderate. So my wish list will be both on the physical front and the monetary front. I think the monetary front, China and the PBOC are extremely experienced, so we definitely expect it will be more accommodating. But the key driver, in my view, is also fiscal policy, to get the confidence right, to really sort out or ease the property issues, and really putting more money into the consumers' pockets to drive the consumption of China.
Tommy, since you brought up property too, interesting because much has been said between the connection between the weak housing market and the weak equity market. Do you think, if it's a big if, do you think if the property market starts to stabilize, would that be a necessary factor or condition for equity markets to then rally? Can we put those two things directly together is my question.
I definitely agree with you. I think in many ways, the connections, just similar to sort of a U.S., the consumer confidence related to the stock market. In China, the overall consumer, or to that matter, the overall confidence level are related to the property price. With the stabilizing of the sales of the property prices, it will bring the confidence back, and then consumers start to consume and the investors start to invest in many ways. So that's definitely positively correlated.
So what is the near-term strategy then? I know you're looking at still at high dividend strategies, buybacks alike. Why do you think this is some of the strategies that are most preferred by some of your clients right now, Tommy?
Well, so look, that's why we're here in Shanghai, right? So we have all the experts here discuss about the sector, the strategies, the macros. Yes, high dividend, it is a very interesting defensive-ish strategies, but in many ways, there's so many great companies. We bring more than 280 great companies, the EVs, the supply chain, the renewable energy, and also a lot of the traditional leading companies. We will discuss with the thought leaders to make sure we find out the best strategies for our investor and for our clients.
Okay, so apart from say defensives like as you point out, buybacks and dividend plays, what else do you think can investors start to consider while the index remains at the bottom?
Well, in many ways we don't really advise sort of a one set of solutions, depending on the client's the risk profile and also their appetites. Many of them are potentially hedged, or we say long short or market neutral type of strategies. You buy the outperforming sector of players, and then you're hedging through some other instruments. Those things tend to work very well in this environment as well, for example.
Tommy, it's a big election year. We have Taiwan kicking off this weekend. So I'm just wondering, when it comes to the Taiwan election, is there any sort of impact beyond what we're seeing or what we could see in the local market? I mean, is there something that in the China market and the greater China markets we should look ahead to too?
Well, in terms of the many factors dictating the market, geopolitical is definitely one of the key ones. It's great we have the Xi-Biden summit in San Francisco. So in your view, so this will continue to be a key topic and a key potential risk factor in overall sort of terms. But I think over the past few years, market have really digested that potential concerns. I think it's really for us how to sort of get through the messages, and hopefully the world is a better place so that everyone carry on business, making money, producing and investing, and hopefully get some good returns.
Tommy, on that encouraging note, have a great conference ahead and have a great week ahead, have a great year ahead. Tommy Fang, the head of China Global Markets at the UBS Greater China Conference in Shanghai. And by the way, have plenty more from the bank's conference there. So later this hour, Megan O'Sullivan comes on. We're talking all things energy transition and how that really influences the greater forces within geopolitics. And of course, we'll be also joined by Larry Summers, as you can see, and also Rick Walters joining us over the next few hours or so. Plenty more ahead. This is Bloomberg. Right, welcome back. Futures are effectively mixed. It's looking like Hong Kong, though, might open higher, but maybe some pressure coming through, continuing still in the A-share market, as you can see there.
Yep, of course, higher yields that we're seeing across, treasuries. That certainly might rock some of the equity market, optimism that we saw in the last couple of weeks. But really, this week that we started in 2024 hasn't been as optimistic as we thought, right? In fact, it was one of the worst weeks that we saw when it comes to global equities since October. In terms of analyst actions to tell you about, we're focusing on some of the insurance space as well. Ping An Insurance, A-shares raised to a hold at Daiwa. Daiwa also talking about China Pacific. A-shares raised to outperform there. Also focusing on the power market there. Huaneng Power, 8 shares raised to overweight at JP Morgan.
Okay, so in terms of the cross-asset action, let's put it that we're tracking here as well. So this rally across the CGB market, which is effectively every day since the late November, we're tracking that, this losing streak on the CSI 300, plus the sectors on your screens. A lot more in store. The opening bell is ahead. This is Bloomberg. Good morning.
The jobs report was absolutely hotter across the board.
It's a solid report.
The labor market is still quite strong.
Of course, we're concerned about what does this mean for the Fed.
This reinforces the notion that the Fed's not going to be in a rush to cut rates.
Certainly, taking back rate cuts is a relatively easy call.
Very initial interpretation is, well, that likely means that the Fed does not actually cut rates. But I think that's a premature conclusion.
I'm actually still expecting a 50 basis point cut in March.
Easing going to happen in March? I don't think so.
I think it's really clear that the Fed is going to be waiting a while before it starts cutting rates.
I think they'll start cutting in May, June.
I think you're looking at the back end of the year for that.
All right. That strong jobs report certainly is weighing on many investors' minds on when those Fed rate cuts will finally materialize this year. So certainly that's one to watch. And maybe that's why we are seeing a pretty weaker start to this week here when it comes to risk sentiment. We're seeing that in China as well. We're pretty slow going right now in Shanghai with the CSI 300 down about 1/3%. But as Dave mentioned, we basically have been down 7 for the last 8 weeks when it comes to that gauge. So certainly it's not doing well. Hang Seng also marginally marginally better. We're basically flat here right now, but MSCI China is lower by 0.4%. Keep in mind also Japan is closed here today, but HS Tech seems to be getting that most of the damage here, just given the fact that yields have been picking up when it comes to the bond market as well. And we talk about those CGBs. That's doing a different thing, right? So we basically have seen this rally kick in, and we're seeing that 10-year yield basically at 2.5% for the 10-year yield. So that's the lowest that we've seen since, I think, of 2020. So take a look at that. So really, that's really where people are betting that maybe there's more signs of monetary easing to come, that maybe there is finally more urgency from policymakers to finally implement those rate cuts. We'll see. All sectors in the red except for the developers index. There are some key news that we're tracking here when it comes to developers. Keep in mind, we also heard that Evergrande NEV has been suspended trading.
Yeah, no reason,
we don't know why, but we'll figure out what happens later. A strong fix in the PBOC here today, 714.76, just given this rebound, the doll that we've seen in 2024. There you go. Some sectors looking a little bit better now. Real estate, industrials, we're back in green territory. Let's look at the boards. Take a look at some movers that we're watching very closely. So we talked about this Zhongzhi filing for bankruptcy. So we've been tracking this shadow bank for a while. This news came out late on Friday. So we're seeing that there's any sort of reaction to this. So everything from your insurers, of course, that have that exposure, some of the trust in China, wealth products, like people that sell that, like KBC, some of the Zhongzhi-related stocks that have exposure. Hubei Mailia, that's one of them. That's down some 3%. And then we're watching some of these state-owned banks as well. There was some sources telling us that maybe it's some of these banks that might actually start helping out Zhongzhi as well, or Zhongrong. That's seeing just slight upside there. But really, a mixed picture across the board. We talked about the property space. Logan, they're having a court hearing here today. So certainly that's one to watch for investors here and what we could see from that court. The stock's down some 2%. We had some contracted sales coming out from China overseas land, poly real estate. I think overseas land, it was a drop of 40% year on year in terms of those contracted sales for December. And Cathay Pacific, the news there over the weekend that they might have to start cutting and canceling more flights through February to try to at least, I don't know, manage the traffic we're going to see during the Lunar New Year.
And, during the Christmas holidays, too, we did see, of course, a lot of illness across the pilots, right?
Yeah.
Which led them to then canceling flights and really just how tight the labor situation is there. We've had a reaction already from our guys at Bloomberg Intelligence here, and they're basically saying, so these cancellations of up to 12 daily flights may be good short term. They still need to find a longer term solution there to address, which is a very sort of slow-moving process to address anyway, these crew shortages. Right, also coming out of the PBOC is, again, removing some liquidity from the system in the order net 40 billion renminbi in open market operations. Renminbi on your screens for you there. Right, let's turn to another big story that we have been tracking, and this concerns China to some extent, of course, South Korea here. So have a look at how some of these names are trading in Seoul today. You had the regulator in South Korea launching this wider investigation into local banks and brokers which sold these exotic notes linked to Chinese markets. That's over concerns that the securities may saddle investors with heavy losses. Now, just keep in mind, of course, the underlying asset hasn't done well, so losses were expected anyway. Bit more nuance here, though. Yukyung Lee, our Asia Stocks reporter, is with us to talk us through the story. So how serious, Yukyung, will the losses from these complex notes be? Let's start there.
Yeah, sure. So the magnitude of these losses may be unprecedented for this type of products called equity-linked securities. So we're looking at about 15 trillion won, or almost $12 billion worth of these products maturing this year. And about half of them might be lost to retail investors, most South Koreans who are older than 65 years old. Authorities said 30% of these products were sold to people who age at least 65 years old who have retired and relying on an insufficient pension system in South Korea. So when these products were sold 3 years ago, typically with 3-year maturity, Hang Seng China Enterprises Index was trading above 12,000, and 3 years later, it's down more than 50% since the 2021 peak. So retail investors who bought this product 3 years ago are looking at about 50% loss of their principal.
Wow. What does this mean? I mean, what can we get out of this probe, then, you think?
Yeah.
And are there indications of mis-selling of these products?
So I just talked to the official from the Financial Supervisor Service this morning, and he said there is a significant number of complaints from retail investors as the product started to mature last week with heavy losses. There must be a lot of complaints and accusations of mis-selling, and depending on how the investigation goes, a lot of these banks and brokerages that sold these products with aggressive marketing and targets may have to compensate the investors. Already we heard from the top governor of the Financial Supervisor Service that he's not sure whether there has been adequate explanation of these products, of these high-risk products to the retail investors when they were sold. So we'll see how the investigation goes, but there could be some claims of mis-selling of these products.
All right, Yokon, thank you so much. Yokon, our Asia stocks reporter, joining us there from Seoul. Certainly, that's one to watch as we continue to, of course, this equity market that continues to see so much weakness. And we're going to stay with China as well, where the Chinese toxic asset manager, Goho, says it's resolved its debt obligations through mediation or repayment. The company had previously warned it was unable to pay debts of around $40 million, citing lower than expected returns. Now, Goho's announcement came shortly after shadow banking giant Zhongzhi filed for bankruptcy on Friday.
Just ahead here, we're talking the geopolitics of global energy markets. Megan O'Sullivan joins us of the Harvard Kennedy School, and we'll be live. She'll be live, of course, joining us live out of the Shanghai, the UBS Greater China Conference taking place there. Lots to talk about. Plenty more in store. This is Bloomberg. Happy Monday. Let's head straight back to Shanghai, where the UBS Greater China Conference is taking place. And our next guest is currently a member of U.S. Secretary of State Antony Blinken's Foreign Policy Advisory Board. Joining us from Shanghai is Megan O'Sullivan, professor of the practice of international affairs at the Harvard Kennedy School. Megan, good morning, and thank you for joining us this Monday morning. It's interesting times. It's an election year in the U.S. We've had this somewhat of a reset between relations between the U.S. and China. How does it feel to be back in China?
It feels great to be back in China. It's my first trip back to China since COVID, and it's a fascinating time to be here. In the world, we see a number of really significant transitions unfolding, a transition from globalization to fragmentation, from cooperation to competition, and of course the transition in green energy from fossil fuels to a cleaner energy future. These are big global trends, and China's central to all of them. So I'm really pleased to be here and to get a look at how China is handling many of these things.
Yeah, how much progress have you seen? I know, not being there, maybe that you haven't seen that, haven't much visibility on the energy transition in China, but we certainly have seen that as a big policy focus from the president at the top. Can China really lead this sort of green energy transition for the world?
Certainly, China is in an excellent position to lead the energy transition for the world, in large part because of the investment that the country has made in supply chains over the course of actually many decades. So we see that China has a real advantage when it comes to the supply chains related to critical minerals, which are so essential to the transition, everything from windmills to electric cars, batteries, and a variety of other things. We also see that the investments made here have allowed China to be one of the largest manufacturers of inputs for the clean energy transition. And I think the real question here is not about the enormous volume of investments that the Chinese have made in the technologies that the Chinese are investing in and have helped produce. The question is, are geopolitics going to frustrate the efforts of China to translate this investment into being a leader? Or is the world going to be so comfortable being so heavily reliant on China and allowing China to really set, or at least be in a position to set the pace of the energy transition?
And as a follow-up to that, Megan, it feels, correct me if I'm wrong, it feels like the latter. It feels like you know, the transition might be on track to for a slower pace because of some concerns over China's control over parts of the supply chain. So what would be the implications of that? Things from higher input costs, for example, of the transition. Just take us through the thinking there. How does it look like to you?
Sure. And first, I would say, just to address the first part of your question, the world is not on track in the energy transition. It's true, and you can see it here in China. There's such an incredible progress in bringing down the costs of really key technologies, solar, wind, and a variety of other things. But it is possible for the costs to come down, but the world to still be producing and emitting more carbon emissions every year. And that's exactly where the world is. In terms of the pace of the energy transition and China's role in it, I do think that what we're seeing is countries around the world, appreciating that perhaps they can't move ahead in the energy transition without China, but really making investments that try to lessen their reliance on China's supply chains. And that, as your question suggested, means that the costs are going to go up. It is going to be more costly. In a perfect world where there were no geopolitics, if China wanted to produce a lot of these inputs at very low cost for the rest of the world, that would be the most efficient and cheapest and fastest way for the world to make the energy transition. But of course, we don't live in that world, and countries around the world are actually looking to duplicate and to make many of the parts and foster the technologies that China has here within their own supply chains. And that, of course, is going to be more costly for the world in completing this energy transition.
So what technologies are you looking at, Megan, in particular, that for one can be scaled quickly enough, and also in some ways that can have the biggest impact?
Sure. Well, I think we've already seen a variety of technologies that have been scaled very, very quickly. And as I mentioned, the costs come down dramatically. And those are in the solar and the wind departments. In terms of the technologies that I think are most interesting and important for the future, a few of them that I'm looking at, of course, is the new generation of technologies when it comes to nuclear power. Nuclear power is going to have to be a major part of this energy transition if the world is going to get anywhere close to where it desires to go. And there are some promising technologies that may allow the world to avail itself of this particular power without some of the downsides in terms of proliferation or waste that have saddled it in the past. Also really important is hydrogen, where countries around the world, including the United States, are making huge investments with the hope and expectation that hydrogen will help the world decrease the carbon emissions associated with sectors that are what we call hard to abate, meaning that it's not easy to use solar or wind to factor into these industries. So I would say nuclear, hydrogen, and of course carbon capture, which has been on the front lines as we emerge from COP28 in Dubai, where I was not too many weeks ago, and a real question about how much we can scale the ability to actually pull carbon out of the atmosphere or to maintain carbon that's associated with the continued use of fossil fuels.
Right. Megan, I'm going to try and bait you in with this next question. You mentioned many fronts that we're sort of transitioning toward. We're transitioning away from fossil fuels. And do you think us pivoting away, taking a step back from fossil fuels also means the world takes a massive step back from all the politics and potential wars and tensions that comes with oil and global power dynamics?
Sure. I should point out that actually the world has yet to move away from fossil fuels. We're in this energy transition, but demand for oil is rising every year. So we're still actually not yet at the point where we're starting to move away from those fuels, although, we're certainly making progress that's necessary for that to unfold later. But to get to your question about geopolitics, I completely am of the mind that we need to make this transition, and we need to do it as quickly as we can with an eye on certain things like energy security and equity and other issues. However, we shouldn't do this transition with the expectation that it's going to relieve us from the geopolitics of energy. It's quite the opposite. Every time there's a big change in the energy system, we get a big change in geopolitics. So there'll be new winners and new losers, and ultimately a net zero world might be one that is more free from the kind of traditional geopolitics as we know it. But the transition itself is already proving to be very bumpy, very jagged, and involving a lot of interests that countries consider to be existential. And that's making geopolitics actually quite heated as climate and the energy transition becomes such a big factor in traditional geopolitics.
Megan, we're going to leave it there, but Megan O'Sullivan, there, professor of the practice of international affairs at Harvard Kennedy School, joining us from the UBS Greater China Conference in Shanghai. It's going to be happening throughout the morning here. We're going to bring you, of course, more interviews, more coverage here. Coming up next, Larry Summers, the former U.S. Treasury Secretary, joining us live in the 10 o'clock hour.
Okay, just some breaking news coming through. This concerns the winding up hearing of Logan, and, well, it's basically been pushed back to January 15. So the Hong Kong court has adjourned that wind-up hearing to about a week from today.
Yep. All right. Another adjournment.
Yeah.
We'll see. Still waiting for Evergrande. And this is next up with Logan
Still
here
waiting
as well.
For many.
Okay, let's get to Taiwan now as they focus on geopolitics. Voters there will choose their next president this coming weekend, an election that is going to shape U.S.-China relations for years to come. 3 candidates are vying for the top job. Governments and investors will be closely watching the result for any trigger for instability in the Taiwan Strait. Joining us now from Taipei is our chief North Asia correspondent, Stephen Ingles. Steve, you're there early. I'm going to join you pretty soon. Let's just tell our global audience what really is at stake in this election.
Yeah, so while local elections tend to focus on the economy and some of the more local issues, obviously, the presidential elections that are held every 4 years really do focus in on the cross-strait relationship. And we've had 2 consecutive terms of the Democratic Progressive Party. And that is, also, where we're seeing the 3 lead candidates, or the 3 candidates. Lai Ching-te is the DPP vice president. He is the candidate. Then you also have the KMT, the Kuomintang, and Hou Yu-ih. And then this year you have that wild card because you have a 3rd main candidate from the TPP party, and that is Ke Wen-je. So a 3-man race, and again, we're in the quiet period right now. We're not allowed to reveal results of any polling in the final home stretch, the final few days, the final week, if you will. And yesterday, Sunday, the front page of the Liberty Times essentially calling, the 3-party race yesterday and the rallies that were held Super Sunday. So it is the final push. And again, the cross-strait relationship is going to be front and center. Again, at least globally, that's what we're going to be looking at. And again, you're going to see a number of different stories pop up this week that will likely be amplified simply because of that election that is going to be held Saturday. There's Taiwan's own spy balloon, if you want to call it that, or weather balloon, as Beijing calls it, scenario right now with at least 12 mainland balloons floating across the midline of the Taiwan Strait between January 1st and the 5th. Taiwan Defense Ministry is saying that some of them actually cross the island of Taiwan. Now, there is speculation that they are perhaps spy balloons, but that is going to be front and center of people's minds because of, again, what happened in the United States with that spy balloon being shot down by the United States. So a number of stories are going to be popping up. I'm going to be talking about them. You're going to be talking about them, Yvonne, when you get here later this week. And again, amplified because of this, the significance of the election on Saturday.
And perhaps related to that, perhaps is the operative word. The big news, Steve, over the weekend is, China sanctioning some U.S. defense firms over sales to Taiwan. Beijing's watching this very, very closely, suffice to say.
Yeah, absolutely. They're looking at this election very closely. Some might say there would be some influence, if you will. There's always been, moves by Beijing. I just mentioned the balloons, but also at the same time, you have this sanctioning of 5 U.S. defense firms after we learned mid-December the State Department and the Pentagon essentially approving about $300 million in foreign military sales, perhaps some of that or all of that to Taiwan. So Beijing has sanctioned these 5 companies for essentially gravely wrong actions by the United States. That's according to the Ministry of Foreign Affairs out of Beijing.
Stephen Engel in Taipei for us, our Chief North Asia correspondent, leading our coverage. And, of course, Yvonne will be joining him in a couple of days. And stay tuned, of course, for that. Our special coverage of the elections. We'll have live updates from Steve and our team every day ahead of Saturday's vote. Full coverage and analysis of the results this time next week. Right, some other top stories that we're tracking. Today, U.S. Defense Secretary Lloyd Austin remains in hospital amid growing criticism over secrecy surrounding his condition. Austin went into hospital on January 1st for elective surgery, but complications sent him into intensive care. Now, the Pentagon says the man who oversees the world's largest military is recovering well, but Republican lawmakers have called for consequences over his failure to go public. Now, China's military says it's extended and upgraded its maneuvers in the South China Sea last week. Beijing conducted patrols and drills in the area, extending 2 days of scheduled operations. Now, the move came after the U.S. and the Philippines mounted their own maritime drills in the contested area. Okay.
If you want to place your money in somewhere in China, the bond market certainly is one. You take a look at what the China Treasury Total Return Index, that's basically been up every day since November, really, Dave.
Yeah, this is really markets betting big and betting even bigger with the record volumes in December, that the PBOC is set to ease rates even further. Yields continue to fall in China. Plenty more ahead. This is Bloomberg.